Welcome back to our lesson in financial management. For today, I will be discussing about capital budgeting. So, capital budgeting is the process of identifying, evaluating, planning, and financing capital investment projects of an organization. It also refers to the process of deciding whether or not to commit resources to projects whose costs and benefits are spread over several time periods. There are several characteristics of capital investment decisions. First, capital investment decision usually requires large commitments of resources, so it will need large amount of funding. Second is most capital investment decisions involve long-term commitments, so since it requires large funding, the projects are usually longer periods before it will be completed. For example, you're going to construct a new building, so dili siya agad-agad. So you need it takes time before it will be completed or to be able to get the returns from your investment. The third one is capital investment decisions are more difficult to reverse than the short term decisions. So, since it involves a large amount of money and it will involve a longer period of time, so it will most likely be difficult for you to just stop the operations, or you would like to go back to from the beginning, or you will no longer continue the project. It's difficult once you already invested your time, resources, and effort to that project. So if you're in the middle of the project and you're out of funds, it will be difficult to decide to stop because sayang tong nasugdan na. And the fourth one is it involves so much risk and uncertainty. Of course, if it takes longer time to complete and longer time before you can get returns from your investment, so naagi na siya high elements of risk and uncertainty. So, dili siya tama sure. Okay? Just like what happened now, di ba? What if you started to establish a new branch and then we had this pandemic, di ba? Wala di siya takatagan sa panahon. So naamantay na napagawas na nga kwarta adto because of that capital investment project. So lisod sad kayo mo stop lang tag kalit, sayang man. Unsaon naman to ato ang napuhunon. So ona siya nga mag-involve yun na siya og dakong risgo. And there are types of capital investment that you may venture in. So you have the replacement, ilisan mo ang asset, or you improve it. So that's way better than before, or you are going to put additional asset aside from the existing one. So there's expansion. So here are some of the capital investment factors. So we have first is the net investment. So in deciding if we are going to push through with a project or not, or in the selection of the available investment opportunities, so we need to compute the net investment. And how do we compute the net investment? So that's the difference between the cash outflows and the cash inflows. So, what are the cash outflows? So, the cash outflows involve the initial cash outlay. So, the amount that you have spent, for example, the purchase price of the asset, incidental project related costs such as freight, insurance taxes, handling, installation, and test runs. And in using the new asset, or in the operations of the new asset, there would be working capital requirement, which is part of your outflows. And aside from that, the market value of an existing currently idle asset, which will be transferred to or utilized in the operations of the proposed capital investment project. The second one would be, the third factor would be the savings or cash inflows. Remember the formula? The net investment is equivalent to the cash outflows minus the cash inflows. And what would be the items that would be included in the cash inflows? You have the trade in value of the old asset, if there's a replacement, proceeds from the sale of the old asset if the asset will be disposed or it will be sold. So if there is a gain on the sale, then that's a deduction of tax from the proceeds. But if there's a loss on sale, then that would be added as a tax savings, so that you will add that to the proceeds. And how do I know if there is a gain or loss? So the formula would be, or the indicator if there's a gain or loss, is if your proceeds are greater than your carrying amount, that would be a gain. And if it's otherwise, if the proceeds is lesser than your carrying amount, then that's a loss. And next question, how do I compute the gain? So to compute the gain, again, you need to get the proceeds and the carrying amount. The proceeds are usually given, and the carrying amount can be computed. So the carrying amount is equivalent to the cost of the asset minus the accumulated depreciation. And what is this accumulated depreciation? This is the accumulated amounts of depreciation over the years that the asset has been used. So, for example, let's say your asset is bought for 1 million, and the useful life, okay, the life or the years that it will be useful is 10 years. Okay, so therefore, how much would, and then your depreciation method is straight line method, straight line. This is your depreciation method. So how do we get the depreciation? The depreciation is equivalent to 1 million divided by 10 years. So that would be 1 million divided by 10 years is 100,000 a year. So that's 100,000 per year. Okay. So let us say that you have been using your asset for 5 years. Okay, you have been using your asset for 5 years. So just simply multiply 100,000 times 5. That's 500,000. This is your accumulated depreciation. Okay, so let's get the carrying amount for this problem. So you have 1 million cost minus 500,000 accumulated depreciation, this one, which is taken from here, and your carrying amount is also 500,000. This is your carrying amount. Okay, so this is the amount that we're going to compare against the proceeds. So proceeds is the amount that you will get from the sale. Okay. So again, you need to compare the proceeds and the carrying amount to determine if there's a gain. So if the proceeds is greater than the carrying amount, then that's a gain. If the proceeds are lesser than the carrying amount, so that's a loss. Okay. And if there is a gain, that would be a deduction. The tax from the gain would be deducted from the proceeds. If there's a loss, any tax from the loss on sale would be added to the proceeds. And you have the avoidable cost of immediate repairs on the old asset to be replaced net of tax. So this is a savings because if you're going to buy a new asset, dili naman ta maka-incur sa gasto sa pagpa-repair sa old asset, kay dili naman to siya gamiton. So mo na ma-apply siya sa savings. And the fourth one is the cost of capital. So this is the hurdle rate, and this is the cost of using the funds. So for example, if your source of funding is borrowings, so therefore the interest rate on the borrowings would be your cost of capital. Now here is an example problem on the cost of investment. So ABC company is considering the purchase of a new machine to replace an old one used in production. The new machine would cost 2,480,000, and the details regarding the old machine are as follows. The cost of the machine is 1,488,000, which had a useful life of 10 years and was already used for 7 years. Much needed repairs amounting to 300,000 $10,000 will be incurred if the company does not sell. And if the machine would be sold, the proceeds would amount to 446,400. The company is subject to income tax of 30%. So what is the net cost of investment for decision-making purposes? And B, assume that the proceeds from the sale would only amount to 300,000. What would be the net cost of investment? So now let us answer the problem. So here is the solution. For the first item, so what will be the cost of investment for decision making? So we need to get the outflows and the inflows. And if you can still recall, the outflows will involve the outright purchase cost and other incidental costs in bringing the asset to its present location and condition. There could also be the working capital requirement. So in this problem, what we have is the cost of the machine. So the cost of the machine is 2,480,000. Okay. So this is our proceeds. Sorry, this is our cost. Okay. So this is the cost of the machine. So this is what we need to get the outflows. So we have here. Next is we need to get the inflows, which would be the proceeds if we sell the old machine. So here we have, if the machine is sold, the proceeds would be 446,400. And remember that we need to adjust the proceeds and consider any gains or loss from the sale. So again, how do we get the gains or loss from the sale? We need to compare the proceeds and the carrying amount. So if the proceeds are greater than the carrying amount, there's a gain. If the proceeds are lesser than the carrying amount, there's a loss. So first is let's get the carrying amount of the old machine. So this is the short form on how to compute the carrying amount. So we need to get the remaining life of the machine. So since the total life is 10 years and the number of years used is 7, so we will deduct. So the remaining life is 3 years. That's why we will get 3. So 3 over 10. So you multiply that immediately to 1,488,000 to get your carrying amount. If we want the long version of the computation, so this is how we will compute the carrying amount. So again, that's the cost minus the accumulated depreciation. So our cost here is 1,488,000. And we're going to deduct the accumulated depreciation. So how do we get the accumulated depreciation? That's 1,488,000 times the number of years used. That's 7 over 10. And that would be 7 over 10. That's 1,041,600. And this is our accumulated depreciation. So you get the difference. So that would be 446,400. And it's just the same here when we get directly the 3 years. So this is the long form and this is the shortcut. Okay. Since the proceeds and the carrying amount are the same, so there's no gain or loss. That's why there's no adjustment on the proceeds. So we will get 446,400. And another inflow would be the avoidable cost of repairs. So remember, it should be net of tax. So since our tax rate is 30%, so net of tax, so we get the remaining 70%. So 310,000 times 70%, so 217,000. Or if you want the long form again, so you get the cost of the repairs and you get the 30% of 310,000. So that would be 93,000. And you deduct, so you will still get 217. So why not just get the remaining part 70% and multiply that immediately. So the net investment would be 1,816,600. Okay. Question B is all about selling it for 300,000 only. Okay, not 446,000. What would be the difference? So the same process, you get the outflows, which is the cost of the machine, and then you get the inflows and you get the net proceeds. So the net proceeds now would be 300,000 since we have the new assumption, and the difference would be 146,400, and it's a loss. Why is it a loss? Because your proceeds is lesser than the carrying amount. So there's a loss. And remember, if it's a loss, then that is a savings. Okay, tax savings. You save because if there's a loss, you will save from paying the tax. Okay, so you will not pay any tax for related to the loss. That's why it's a savings. So only in the amount of 43,920, and you add this to the sale of 300,000. So the total proceeds is 343,920, and that would be the amount we will place here. And the avoidable cost of repairs, again, that's the same, 217,000. So total of 560,920, and your net investment is 1,919,080. So if you're going to compare this one with the previous answer that we had, okay, the case in A is has a lesser net investment, and it means that you will only require funding for 1,816,600 here, compared to this one in which you will be needing 1,919,000 and 80 pesos for the funding. So this is the cost of the investment. So between the two, it's the cost of investment in A would be lesser, and the reason is that it has a greater proceeds because the proceeds here is 446,400 compared to B. We only have 300,000, so mas gamay ato ang pang-deduct. Okay? So there are different ways on how we can also compute the cash inflows. So we have here, if we're going to compute the net cash inflow, so you will start with the incremental revenue. So incremental means additional revenue arising from the project, and then you deduct the additional cash operating costs because of the project, and you have the annual cash inflow before taxes. And after that, you're going to deduct the tax, which is computed as the annual cash inflow before taxes, and you deduct the depreciation and multiply by the tax rate, and that would be your taxes. The answer would be the annual net cash inflow after tax. And if you're going to use the long form, so again, you will start with the incremental revenue deducted by the cash operating costs, and you will get the annual cash inflow before taxes, but you will deduct the depreciation to get the net income before taxes. And from this, you can compute your income tax, which is based on the net income before taxes, and you will arrive with the net income after taxes, and then you add back the incremental depreciation. So you will add back the depreciation because depreciation is a non-cash item, but this is considered in determining the net income. So most likely, makuan ang ato ang net income because of the depreciation, but this is not an outflow. This is not a cash outflow. So that's why we need to add that back again kay ma-understatement nato ang income because of the non-cash deduction. And then to compute the cash savings, so you need to compare the operating cost if the old asset is used and the operating cost if the new asset is used. So if the expenses before, the operating costs before are greater than the operating expenses in the new asset, so there's a savings kay mas maka-save man ta sa new asset kay mas gamay raman og gasto. In the same process, you get the tax and you will get the annual cash savings for after taxes. And the long form is you start the same process. You compare the operating cost in the old asset and the operating cost in the new asset. And again, you deduct the incremental depreciation. You increase, you will get the increase in income before taxes. Deduct the income taxes, which is based here, and then increase in income after taxes and add back again the incremental depreciation, and you will get the net cash savings after taxes. Okay, so that would be the end of our first part of the capital budgeting lesson. In our next lesson, we will be dealing with the commonly used methods of evaluating capital investment projects. So see you in our next lesson. If you like this video, please don't forget to click subscribe and hit the notification bell to be updated with the latest video lessons. Thank you for watching.